Hi, welcome to the week that was, where we break down all the big events from the week and tell you how it impacts your money. First, the markets. The market correction that we saw last week continued into this week. However, midweek we got a good bounce back and recovered most of the losses that we saw earlier this week. One important thing to notice is foreign investors who were very bullish about India last month have turned extremely negative. They pulled out a total amount of 56,000 crores so far, making it the highest monthly withdrawal since June 2022. And to make things worse, we're not even halfway through this month. So why sudden change in sentiment? If you've been watching our videos, you know the reason is China. China over the last 10 days have announced stimulus packages as well as policies to improve consumer spending and arrest the fall in their stock market. Foreign investors now see greater potential in China and withdrawing money from India and allocating it to China. However, this excitement seems to have faded away because most investors have now realized that in order to fix the structural problems in the Chinese economy, it requires a greater intervention. Moving on to the more important events from the week, I've got three of them for you. First, RBI and repo rate. RBI announces that Indian economy and inflation are stable and leave the repo rate unchanged. Repo rate is the interest rate at which RBI lends money to banks when they need it. RBI uses repo rate to control the money or the liquidity in the economy, the growth of the economy, and inflation. Higher the repo rate, higher is the cost of borrowing, which means the interest rates that you pay on your home loan, your auto loan, your personal loan, or corporate loans will be higher, the EMIs will be higher as well. The inverse is true as well. When the interest rates fall, companies can borrow at lower cost, and this encourages expansion. The fact that the repo rate has remained unchanged since February 2023 indicates that RBI believes that the Indian economy is stable and doesn't require any intervention. In simple terms, the liquidity, the growth, the inflation are in balance. 2. Gold prices continue to shine. The gold prices in India have hit an all-time high again. 1 gram of gold today costs you 7,780 rupees. This in spite of the fact that government recently cut import duty from 15% to 6%. The rise in gold prices can be attributed to the US elections later this year, Fed cutting interest rates, and the uncertain geopolitical situation. With Fed, that is the Central Bank of America, cutting interest rates, investors have piled on gold as a safe alternative to gold bonds. The depreciating rupee hasn't brought cheer to Indians who tend to buy gold during the festive season. If you're an investor with short-term goals, adding gold to your portfolio will help you mitigate the market volatility. However, if you're a long-term investor, you should be aware of the fact that gold historically have given modest returns of 5 to 6%, which is considerably lower than some of the other asset classes. So, what next? The Indian markets are poised very interestingly. Starting this week, companies will start announcing quarterly results. The outcome of these results will set the next course for our markets. 3. TCS quarterly results. The earnings seasons have kicked off, and TCS is usually the first one to report and to set the tone for the rest of the season. As you're aware, Indian IT tech companies have been facing a lot of headwinds due to the fact that most businesses have cut down IT spending and reassessing their AI strategies. The Indian tech firms have been underperforming for over a year now, but in the last quarter, there were some encouraging signs. In fact, the shares of the IT tech companies have surged more than 23% in the last 3 months. However, the big question remains, will this trend continue? India's largest IT services company, TCS, reported a 7% increase in year-over-year revenue and a 5% increase in net profits. The net profits stood at 11,909 crores. Although these numbers signify growth, it fell short of market expectations and the stock price took a dip of 2%. But it's not all bad news. Here are a couple of bright spots that stood out for me. First, the headcount. TCS added over 10,000 employees in the first half of this financial year. This signals that TCS is prepping for higher demand in the near future, which is a good sign. 2. Gen AI is here to stay, and how Indian tech companies adapt and bring Gen AI as one of their services is critical to their future growth. TCS is seeing a lot of momentum in this space and is handling over 600 AI and Gen AI projects. This is a very healthy sign for the future growth of TCS. These two factors makes me believe that TCS is well positioned for near-term growth. With that, we come to the end of the show. Don't forget to like, share and subscribe. See you next week.